I'm happy to be with you today. Again, my name is Vaike O'Grady. It's a little bit tricky. Vaike is an Estonian name. It's my grandmother's name. And then I married an Irish guy. So it doesn't exactly roll off the tongue, but I'm stuck with it. So I am the Regional Director for Metrostudy here in Austin. I started September 1 with Metrostudy. Prior to that, I spent 16 years with Newland Communities, a large master plan community developer. And prior to that, I spent almost as much time with regional and national builders, including Ryland Homes. So I've got a building and development background, and I came to Metrostudy because I was ready to try something new. And Metrostudy really is the preeminent database for building and development. Every quarter, we send some surveyors out into every new subdivision in Austin, and we count all the starts, all the closings, all the finished vacant, all the lots that are on the ground. And every time a new subdivision is platted, we put it into our system. So we've got a huge database of primary research that counts starts and closings, okay? A little bit different than sales that, ABOR would track. We're actually counting it by a windshield survey. So we're actually physically observing everything we put into our database. So that's the background for Metrostudy. Our primary clients are builders and developers who purchase memberships, so they have access to the data through a website as well. But we also do consulting reports, special reports, and those kinds of things, okay? So I'm going to share with you a little bit about our fourth quarter report. That's the most recent quarterly data we have, and I added in a couple of updated slides here. Next week we'll start driving for the first quarter, and so we'll start wrapping that up into early May kind of presentation time. Okay, any questions before I get started? Feel free to raise your hand and ask a question along the way. I'll try to go at a fairly good pace, but slow me down if you need to, and I'm happy to answer any questions afterward. I also left some cards up here. If you have some questions, you can let me know. Okay? Yeah. Okay, so I always like to set the context in terms of what's happening in the Austin economy. When you look at job growth, which is a key driver for housing, one of the things that we're a little challenged with now in Austin that we haven't had to deal with in the past is that our job growth is slowing, okay? We're at a 2% job growth now. This was as of November. In December, it actually dropped to 18.8 versus 19.5, so job growth has slowed fairly significantly. Now, should we all be wringing our hands and saying, Austin's, not doing so well? No, that's not really the case. In fact, March 10th, I believe, is the date when the Texas Workforce Commission will adjust those numbers for seasonality. So I expect them to pop back up a little bit, but I don't expect them to pop back up to where they were a year ago. We were at 44,500 jobs in December. So I think we'll probably inch up a little bit closer, but we'll probably stay closer to 2 or 3% job growth in Austin for the foreseeable future, as opposed to the 4.5% we enjoyed most recently. Oh, just another note on this slide. The top 4 here actually stayed the same in terms of markets: Orlando, Seattle, Dallas, and Denver. I think Seattle and Dallas actually switched places. And last quarter, Austin was actually at number 5. So you see, it's kind of a big slide, but it's slide relative to, these are all cities with populations above 2 million. The other thing you want to note here is that, and we'll talk about this a little bit more, the earnings to permit ratio, employment to permit ratio, that EP ratio, in Austin is the lowest on the slide. So what's happening is that the lot supply is actually growing in Austin. And that's a good thing, because we've been undersupplied for many, many years. This is how it looks 2015 versus 2016. So you see we were doing really, really well until July. July is always a negative job growth month because of seasonality with teacher employment, et cetera. What concerned me a little bit is that August dropped and September dropped just a little bit. October and November didn't rebound as much as we thought. But again, March 10th, we should be seeing the adjustments to this. And so I'm hopeful, you're looking at adjusted numbers, of course, for 15, that we'll get a little bit closer to the good job growth that we've seen. We've been enjoying explosive job growth, and it's probably to be expected that we're going to moderate a bit. Again, no cause for wringing hands. We expect the population to continue to grow in Austin. We'll be 1 million people here in Austin, or 1 million employees, in 2017. And the incomes are good. When you compare incomes to the rest of the United States at 55,000, our median income is 67 currently. And it's expected to continue rising as we've been dealing with unemployment levels at 3.2%, 3.4% for quite a while now. So there's some pressure on companies to raise wages for employees, and they'll benefit from that. In fact, The other thing we'll benefit is from the mix of employees that we have here in Austin. This is a survey that the Statesman did over the summer, where they interviewed tech employees and asked them about their median salaries. And as you can see, these are really healthy numbers. And so the types of jobs that are in Austin are good paying jobs, some of the new jobs that are coming online. The other thing that's room for confidence or reason for confidence in Austin is the office market. I was with someone the other day who said you feel like they're in a reverse recession in the office market. Rental rates are going up, vacancy rates are staying very low. There's no end in sight, and there's strong corporate relocation. And the other exciting thing about this is suburban market office construction absorption. So you see that it's not just happening in the central business district, it's happening all over the city. In fact, if you look at some of the key areas here, the ones I've circled have at least 8% or lower than 8% vacancy rates and significant new commercial construction. And most of these are already pre-leased. In fact, the Domain just right up the street here is a shining example of that. But you're seeing office growth in the Southwest, you're seeing it in the Northeast, you're seeing it even starting in the Southeast. The other thing that we always like to try to keep track of is what's happening in the resale market. The story is one of affordability, and that's becoming a challenge here for us in Austin. We've gone 10% up in median price year over year, and that's following 6, 7, 8% increases the past few years. Hasn't seemed to impact days on market, hasn't seemed to impact the turnaround time. Months of inventory is still fairly low, so it's still healthy, but I think there are some concerns about, are we hitting a price ceiling now for the majority of Austin buyers to be able to afford a home, in that category. So let's talk about the new home market in terms of demand. This year we finished up the year with 14,462 single-family, detached, and townhome closings. That's up near 2006 levels. 13,341, I said closings, excuse me, 14,000 starts, 13,341 closings, okay? There's a little bit of a gap between starts and closings. That usually tends to fill itself out. It is a little bit bigger gap than it was a year ago, and that's because there's so much activity in the Austin market. Here's how it plays out when you look at the 2-year trend. Look at the numbers for starts, single-family housing starts, quarter by quarter. Significant increases. In fact, we're 7% higher than we were in 2006 in terms of the number of homes starting in Austin. We're also closing a lot more homes in Austin, so that's good. That's a sign of a healthy market. We were above 3,000 quarterly closings every quarter. We haven't done it since 2007. Yes?
Is this Austin city limits?
No, actually it is the Austin metro area. I'm glad you asked that. Thank you. Yeah, we go as far north as Burnett, as far south as San Marcos. So this is the entire area. And I'll point out for you exactly where the activity is happening, so that would be useful as well. One of the interesting things, and one of the things that's keeping the Austin market so hot in terms of housing activity, is that a lot of what's being put on the ground is in the price points below $300,000. So you see the big bumps in 200 to 249, 250 to 299, but across the board, now these are closings, so these are homes that buyers are moving into. Across the board, in all price points except below 200, we're seeing upticks in closings. So the market is still very healthy. And here's where it starts. So builders are kind of betting big on the $300,000 and less. There's less supply in the upper price points. But it's still growing. You can see the gaps here between starts and closings. What has started to happen is that builders who were serving the 200 to 250 buyer are finding it's more and more difficult to bring product online to meet that buyer's needs. And so you're seeing the price points sort of shift up to 250 to 300. Okay? The question is, where is that going to stop? The other product lines, 300 to 349, 300 to 399, they're all pretty close in terms of starts and closings. So again, that's indicative of a healthy situation. And in terms of geographic location, the big news, or most of the housing that's being put on the ground, is in the Kyle Buda area. Kyle Buda, Cedar Park, Leander West, Cedar Park, Leander East. Those two markets are really kind of broken up by the tollway, the 183A tollway, and Pflugerville. Pflugerville and Kyle and Buda are mostly affordable markets. Cedar Park, Leander West tends to get a little bit more expensive. Same thing with Leander East. So those are the hot areas. One of the things that we hadn't seen in previous years is the areas along 130, Hutto, Del Valle, Manor, are all starting to become very prolific in terms of housing starts and closings. And that's driven by price. When you look at who the builders are who are contributing to the Austin market, the top 5 here contributed 40% of all starts. So the D.R. Hortons, the KBs, the Pulte's, the Lennar, Cal Atlantic, 40% of all starts happen with those builders. We track about 25 builders, actually closer to 30 builders in the market. Nearly all of them have had an uptick in activity this year. So now I'd like to dive into supply and talk about what's out there to purchase. One of the things we track is housing inventory. So what's actually out there in terms of models, under construction, finished inventory, and then we look at months of supply. And in a good market, we like to be between 6 and 7 months of supply for housing inventory. You'll see that below 250,000, we're actually very tight. It's hard to find a home for that price point. As you start getting into the upper price points, there's a little bit more supply on the market, and that means that if you're going to put something on the ground, you need to really have your act together in terms of what the product is that you're offering, your marketing, your sales approach, et cetera. It's a little bit more competitive. When you look at where you can buy these homes, again, the same markets pop up, okay? Pflugerville, Cedar Park and Leander, Kyle Buda, significant supply in the market. So there's a lot of buyers out there. There's also a lot of opportunities for those buyers. Places where we've got a little bit more softness, as represented by the diamonds up in the 10 and above. You'll see Dripping Springs, maybe a little bit oversupplied. Liberty Hill Market, perhaps a little oversupplied. And then Lake Travis. Now those 3 markets tend to be a little pricier as well. So again, if you're going to be competing in those markets, you really have to fine tune what your offering is in the sales and marketing program. For overall housing inventory as a percentage of the market, you want to be below about 30%. So we're bumping up against that in a little bit in terms of some of those upper price points. Again, below 300, there's not really any concern. And really not a concern overall. Once we get to like 35%, if that happens, then I would be more concerned about a downturn. Finished vacant inventory. The resale, the MLS has 2.0 months of finished vacant inventory or spec homes available to purchase. It's really, really tight in the new home market as well. That's a sign of health. If you have a lot of homes standing on the ground that haven't been sold, that's an issue. That's not the case here in any of our price points. And then we look at vacant developed lots. So when a developer puts lots on the ground, we want to see how they're doing in terms of those lots sitting or moving, houses being put on them. We like to be between about 22 to 24 months of supply. So a builder needs about 2 years of supply ahead of them to feel like they can provide the housing that's needed. For a long time, we didn't have enough lots on the ground. So it was really hard for builders to find positions. In fourth quarter of 14, we were at 15 months of supply. We're now up to about 20. So we're still undersupplied in terms of lots on the ground, not significantly as undersupplied as we were. So the market's catching up. When you look at it where it is by price, where there are the most lots, most supply for lots is obviously in the higher price points. But everybody below 500 is in a healthy position. And where are the vacant developed lots? The first one is Cedar Park, Leander West, Pflugerville, Liberty Hill, which is a concern. The diamond and bastrop that you see all at the top there is one community called Tahitian Village. Anybody familiar with that one? It was put on the ground like decades ago. There's still lots, 1 acre lots kind of sprinkled around. So that's going to be there for a while. It's kind of not really indicative of the overall health there.
I don't think they're really lots.
Well, yeah, some of them don't even have roads to them. That's right. So Dripping Springs, Liberty Hill, again, some areas of softness. And in terms of new lot deliveries, we also track when new lots are going on the ground. So you'll see that builders, again, are kind of betting big on the 250 to 299 in terms of lot deliveries. Okay, that's where most of the lots are going on the ground. If you look between 300 and even up to $1 million, there's not any discrepancy there. So we're not overbuilding or not adding more lots to the mix in those cases. And that's probably good because we've got enough supply there. And then here's where the future lots are in the market. Del Valley is hitting it really, really hard. When I first came to Austin 6 years ago, nobody wanted to build off of 130. There was concerns about schools, there was concerns about soils. That's no longer the case. The drive to affordability has pushed builders to go out into Del Valley, and the buyers seem to be accepting it. And I think a lot of that may have to do with the makeup of the Austin market, in which you've got a third of your population is millennials, and they're looking for a first-time home now. The oldest of them are turning 30. Maybe they're getting married, maybe they're having children, maybe both. And they're looking to purchase their first home, and they just can't find anything affordable inside Austin. So in summary, I think that the first half of this year is going to be real strong. And I've heard this with builders as I go out and meet with them one-on-one. They're telling me that January is very strong, February is very strong, still significant interest. And part of that's because the market is still, overall, it's undersupplied. There's strong starts in the fourth quarter. So if you're starting spec homes, which a lot of builders depend on, remember we've got 5 builders building 40% of all the starts. You're building a lot of spec homes, there's a lot of inventory on the ground. And those builders, the Lennars, the DR, Hortons, et cetera, they're not gonna let them go without being sold. So what we watch for is how much discounting do they have to do it, if anything, to move those homes. Finished vacant inventory is very low. We talked about that. Months of supply, specs not being sold, very, very low in the market. Also very low for resale. And then the lot deliveries that have been brought on last year were generally aligned with the key price points where most of the market is. So that all points to a strong spring. Oh, got a little ahead of myself there. One challenge that builders are having, and these are sort of tied together, price point fatigue. But we're getting to the point where there aren't enough shoppers for some of these builders to be able to do price increases like they have in the past. If you're above 400 or so, we're seeing essentially prices staying pretty flat. We're not seeing a lot of increases happening. Part of that is part of the challenge for builders is because there's a lot more regulation in certain municipalities that makes it more expensive to build. And also they're having challenges with getting labor. And construction prices as well, lumber, concrete, et cetera, have gone up. So the typical production builder is getting a bit squeezed in terms of their profit margins, and yet they may be bumping up against some price ceilings that they can't overcome. So that's a kind of a flag for us that things will start to soften, likely in the fall. However, the communities that are really focused on millennials, and I would add boomer buyers to this mix because they're the biggest chunks of who we've got to serve here in Austin, will continue to do well. Okay, it's the ones who are suffering a bit are the ones who go after the traditional families and the McMansions. That's not just doesn't seem to be as appealing to buyers today. So they're looking for more of a niche product that is well represented, marketed, looks great, that demand high architecture. And if you're serving those buyers, the millennial and boomer groups, you should do well. And then the big question is, will job growth rebound? We really need that job growth to come back up to about 25,000 when they adjust here in a couple of weeks for us to feel comfortable that we'll continue to be a very strong market in Austin for the foreseeable future. So that's what I have for you today. I hope I didn't go too fast. Any questions I can answer for you? So what you expected to hear? Yeah? Okay. Well, yeah, sometimes it's good not to have surprises. But, there's been a lot of talk in the news about affordability issues in Austin, and it's real. It's going to have an impact on us. And, I don't think we're going to be heading backward anytime soon. We don't foresee any big falling off of a cliff. But things will start to soften and get a little bit tighter, and that might not be such a bad thing. Yes?
Out of left field, but does your organization take into account the overstressed infrastructure that the Austin area is experiencing right now? That yes, there's lots in the ground, and yes, there's a lot of houses getting built and stuff, but anybody that comes here and looks at it for a while says, if I buy a house here, I'm going to spend my entire life in a car going back and forth to my job, and I don't think I want to do that. Price point's one thing that might cause a softening, but
Right.
eventually the word gets out of
Yeah.
this is one of the top 4 or 5 congested areas you can try and commute in.
Yeah.
And is that a forecasting point for you?
Yes, it's something we're watching for sure. I think that's also one of the reasons that the 130 corridor has been so popular, because you can actually get into Austin from Manor in half an hour, and it's mostly toll roads, especially with the 290, 71 completion. So it's really kind of helped in that regard, and 183A, the same thing. So you're seeing builders recognize that they can go along sort of the toll road corridors and do pretty well. It's become more of a challenge like in Dripping Springs, where there's really no good commuting route.
Of course, the problem with toll roads is they're all fine and well until they dump on the roads that are already crowded.
Yeah,
before they
that's a
connected
good point.
to toll roads, which made it worse.
Right, but I take heart in the commercial construction that's happening in the outlying areas.
Right.
So if some of the companies are choosing to be outside of Austin, everybody comes here and says, oh, I want to be downtown, and then they look at the price point and they say, I can't be downtown, you know? So, but, you know, companies are doing that too, so they're making the choice to go outside, and I think, I take some heart in that. But it is a concern. Yes,
So with the recent announcement of Austin being the best city to live in,
yeah.
it's an intangible, but how do you think that's going to parlay here?
You know, I think Austin has done, I say we, like I take credit for the brand, but I think Austin's done a really great job as positioning itself, right? I mean, I don't think you just make those lists because, I mean, there's a lot of different factors that play into it, but I think there's a brand that's been established for Austin, which is really strong, and it will hold. And frankly, look at the weather today. You know, I think we've got one of the most beautiful cities around. So if people can afford to be here, I think there's still strong reason for people to want to be here. And I don't see that going away anytime soon. If what I really see is that we're going to moderate a bit. You know, we're just not going to have the rampant growth, and some of that's going to be tapped down by companies making a choice not to come. But people who live here, I can't tell you how many people I run into who go to school here, leave and come back, because it's just it's a great environment, and it is an intangible, but it's one that adds value. Yes.
I can't remember, how does the commission define a job? Remember?
You know, I don't know the
Is it
specific.
40 hours? Is that what
You know, I don't know the answer to that. I'm sorry, I haven't checked that, but I will. I'll be glad to. Yeah, I'm really looking forward to having that commission report come out. Yeah. Any other questions I can answer for you? Well, terrific. Thank you, Tebet, for having me here today. I appreciate it.
Appreciate it.
Thank you.
Great.
All right, thanks.